Okay, guys. So I'm an idiot, bro. I completely forgot to save the recordings, but um, I just wanted to go over market maker models in this lesson, I guess you could say. So I'll actually go more in depth. So here, so you guys have probably heard of market maker models before, but what are they specifically? So market maker models are essentially the way the markets move. So right here, I'm on the daily time frame. Um, so for every market maker model, there's going to be for a market maker buy model, there will be a sell side of the curve, which then goes into the buy side of the curve. And for a market maker sell model, you're going to have the buy side of the curve into the sell side of the curve. So this is the general framework of what a market maker model is. So, since we had a pretty bearish July, I'm going to go over the daily market maker model because it's very clear. So, if we go back to January 2nd and mark out our opening price, so here's our yearly opening price. So, throughout January, February, and March, and a little bit of the first week of April, you guys can see we had an accumulation. So when we have an accumulation, it gets followed by what? A manipulation. So the start of April, which is also the start of our second quarter, we get this manipulation down and we get a change in the state of delivery. So what this means is this is a good sign that smart money is in this area and we want to push up, since we also have, let me check real quick. SMT right here. So from this low to this low, we have SMT. So this is a good sign that smart money is going to want to push price higher. So every market maker model starts with an original consolidation. Then we have a first stage accumulation. Then we get a second stage of accumulation. And then we reach our target. So this is the general framework for market maker models. So down here, this would be our original consolidation. And so you want to anchor your standard deviation to the last swing low or swing high that sweeps liquidity and also causes a change in the state of delivery. So down here, this is where we change the state of delivery to the upside and swept liquidity down here. Let me see if we had SMT here as well. Yep, we had SMT. So we have SMT down here, and we also changed the state of delivery to the upside. So this is your original consolidation. And after every consolidation, we're going to expand. No matter what, price will expand away from a consolidation. So all of this price action here is balanced. So price has no need to return back to this consolidation. So after we consolidate, we get our first change in the state of delivery right here. And then we get a major change in the state of delivery, which also has a bunch of equal highs resting above. And as you guys can see, our -1 standard deviation lines up with these highs. So break above, and what happens? We consolidate again. So this is your second stage of accumulation. Let me make it blue since it's a buy side of the curve. So accumulation 1, and drawing the standard deviation from this swing low to this swing high. You guys can see it, -2 to 2.5 lines up with -4 of our original consolidations manipulation leg, which is a good sign that price wants to hit this -4 standard deviation. So accumulation, manipulation, and let's see if we got SMT. Yep, SMT right here. So we have this SMT. And what happens after consolidation? Expansion. Price expands and has full body closure through -2 to 2.5. So this is very important because -2 to 2.5 is a common reversal zone, and having full body closures through this area indicates that price wants to reach terminus. So accumulation, expansion, one more stage of accumulation right here. And price finally expands. Let me draw a manipulation leg. This one's not very good. So we reached -2 to 2.5, which is what? A common reversal zone. And which is, it also lines up with terminus of our original consolidations manipulation leg. So what happens here? We form SMT. Yes keeps pushing higher while NQ fails. So we have SMT. We reached terminus of this manipulation leg, and we also reached -2 standard deviation of this accumulation 1 manipulation leg. So what happens? We get a change in the state of delivery right here. So this is a good sign that market makers want to start pushing down into previous lows. So these are known as IPTA levels. So the leg that you look back 20 days from the leg that caused the market structure shift or the change in state of delivery. So July 17th, we look back 20 days, and these are your IPTA 20 lows. And from here, we look back another 20 days to May 17th. This is your IPTA 60 low, or IPTA 40 low, sorry. And then you look back another 20 days to April 17th. And this is your IPTA 60 low. So these are engineered lows for the market to refer back to when it starts the opposite side of the curve. So notice how our IPTA 60 lines up with our original consolidation. Price tends to speed up. So this is very important. Price tends to speed up when it starts its second expansion leg to the downside towards the original consolidation. That's why we had that major overnight move during Sunday night, and everyone was just freaking out, but it was just the market completing its sell side of the curve. So just to mark out really quick, this is your original consolidation for your market maker sell model. And if you draw our manipulation leg right here, Let me move these real quick. So this manipulation leg, our last manipulation leg before we changed the stated delivery, our negative 1.5 lines up with our IPTA 20, and our negative 4 lines up with our IPTA 40. So by the end of July, price runs this low, and we just gap down and continue into the IPTA 60. I didn't really expect this, but the market is very unpredictable. So this is your first stage of accumulation right here. I'll make it red. And if I'm not mistaken, we formed SMT up here. Yeah. So ES tapped into a daily fair value gap while NQ didn't, which is a form of internal range SMT. SMT, accumulation, expansion, reaccumulation, up here. Yeah. And expansion into our IPTA 60. So this is your full daily market maker model going from a buy program, forming the reversal, into our sell program. So heading into the rest of the month, according to according to seasonal tendencies, August and September are historically bearish. So I would like to see price start a buy model into premium of this dealing range. So if you head on to the weekly, you can see that this fair value gap is still untapped. And this is also a balanced price range. We also have these highs resting in a daily fair value gap. So if price wants to continue lower without having a deep retracement, we can turtle soup these highs and start pushing down to form new yearly lows. Or price can completely violate this high and tap into this SIBI and continue lower. Or we can just violate all of this, get a change in the state of delivery, and make new all-time highs. So I'm saying this because it is election year, so anything can happen. But for now, I would like to see at most these highs. But heading into tomorrow, Friday, August 9th, I would like to see this fair value gap by either tomorrow or next week. Since we got the full body closure on the 4-hour through this new week opening gap, and we also changed the state and delivery, and we have SMT. So heading forward, this is what I would like to see. So that's about it for this lesson, I guess you could say. It's kind of my punishment for not saving the recording, but I hope you guys find this valuable. And if you guys have any questions, you can just let me know in the chat.